Okay, another update on my Robinhood account. Right now, I'm up to $52,644.69, and for the week, that's count is up about 9.9% for the week. For the month, about 32%, and for the last 3 months, about 52%. Most of that comes from this AMD, debit spread. When this is all said and done, I will get a return of about 130, 140%, going from $1.1 per debit spread to $2.50. Right now it's pretty much, unless AMD crashes below $80, is pretty much it. AMD has been on an absolute tear lately. That's 94.15 right now. They announced their merger with another company, X-Links. It's got approved, and that's one of the reasons why they're up. I just wish I had made this upper leg a little bit higher by the time everything was crashing. I believed it was at an all-time low. It actually went down to around $75 before it rocketed up, and they announced they were doing a buyback program. So I'll probably just hold this until it expires July 16th. But what I want to focus on today are my two SPAC plays and SPACs in general, trying to get a sense of this SPAC arbitrage. I'm trying to work out some of the details. As you can see, I've got WPF, and WPF has a debit spread from $7.50 to $10. This is fully mean, and they had a deal today where they were voting on whether or not to merge with the company. So they did have that meeting today, June 30, 2021, and they did decide to merge with, let me see what was the name of that company. Alight Solutions. I believe there's some type of cloud or information base. It really doesn't matter. I was hoping to get a little bit of a pop today, and that's why I was playing this 12.5, call option. We'll see if we get that pop tomorrow. It merged pretty much halfway through the day, and it actually dropped a little bit after announcing the vote where it would merge. Usually it's kind of the opposite. You'll see a pop up to maybe 10.50, and that was when I was looking to get out for maybe a 20% gain. Same thing with the debit spread. I wasn't going to hold that until expiry, because the merger, when it expires, you put yourself at risk of it falling below $10, whereas if it just stayed a SPAC, it's probably not going to fall below $9.90 or $9.80 or whatever, and you can claim that 20 to 25% if it closes. If you're able to get it for $2, my average cost was $2.12 a debit spread, so you're able to get that 10 to 15 to 20% without having to worry about the downside. So that's kind of what I'm trying to search for. If you can actually get that, or there's just these opportunities to buy these debit spreads around $2 only exist about the time they merge. So I don't want to hold it through the actual merger. I'm not sure what date they'll change ticker symbols, but it's not uncommon to see a drop in the value. You'll see a run up on the value until the actual merger date, and then when they change, it could go either way, really. So that's kind of what I'm trying to play, that little time period before the merger when they vote and stuff, and usually it pops a little bit, but I'm trying to get out before it actually merges through to limit my risk on the downside. Same thing with ACIC investments. They're merging with a company called Archer that does electric flying airplanes for short taxi type trips. I'm able to get in this debit spread for about $1.97. This expires in August. They'll probably merge before then, honestly, and I could kind of see if I've got something real here or if it's just kind of hit or miss as far as, you know, being able to consistently make that 10, maybe even 20% on these merger plays right before they merge. So I was looking at the calendar, and I was able to find a site with some upcoming merger votes. So I'm going to keep my eye on these and kind of get a feel of how these play, whether the ones I was watching before where they kind of popped after the voting date and merging together, whether that's a trend or that just kind of happened to be a coincidence. If it is a trend, you can make, you know, 10 to 20% pretty quickly on these without any really downside risk, and that's kind of what I'm trying to put together. But we see today these companies, ALUS, HOL, APXT, did their vote, and usually they merge within a week after the vote has approved it. I'm also going to keep my eye on these upcoming ones in July. SPRQ, ASPL, AONE, especially these one right around the $10 mark, because that's kind of the floor. So that's kind of your limited downside risk. LCY, EMPW, DCRP. As you can see, this price action, this is the old site. What caught my attention too is CCIV and Lucid Motors is set to vote on July 22nd. So you might see a run up of CCIV all the way up into that date, and then it'll change their ticker symbol. So it might get up to $30-$40 before it merges. We'll see. Kind of curious to see how the price action goes, see if I could carry that kind of mark going forward, and see just how these SPACs play out, and just kind of try to get a system together where I can consistently make, you know, these small gains that add up over time and compound them. It's kind of my goal right now. If it doesn't work, I'll move on to something else. If it works, you know, you've got a very limited risk strategy that can make quite a bit of money in a short amount of time. I'm looking to probably get back to selling options as well after my AMD option closes. The rest of my portfolio, I have a NEOP call option. I sold against it to make a debit spread. I should have done that. Got BNGO, GSAT, LRXC up 24%, Lemonade's up 33%. Same thing here. I've got a debit spread in ME23. Gilt, that was a bust. I bought that a long time ago. I couldn't get out of it. Got Elevate Credit just because that was kind of me just testing the waters on finding value plays, because if you look at Elevate Credit, their PE ratio is 2.22, so I'm kind of seeing, you know, how that PE ratio, and reading some of the credit statements and income statements plays out. I also noticed back about 2 months ago, I got on this debit spread 78.50 First Solar, because First Solar had a lot of earnings, it had a great PE ratio, and it was pretty much the only solar power company that was actually profitable, making great money. And at the time, the solar sector was down like 50% across all the stocks in the sector. So I noticed that at the time the PE ratio for this was about, I don't know, 12, 13. It had good earnings per share, so I figured it'd bounce back, doing a little value investing. Bam, look at it now, 91.82. So I'm gonna try to find more of those little beaten up segments of the market, trying to find a little bit of value as well as far as the earnings per share, the PE ratio, moving forward, the earnings. I started reading some books about value investing and creating cash flow models, so I'll post more of that in the future. But right now, I'm trying to take advantage of this little market on the SPACs, so hopefully I could find a strategy and put that together and start to make more consistent gains, or get back to selling options.